Welcome to the crowd. My name is Sherwood Neese. March was another record-setting month for the online investment index and regulation crowdfunding. During March, over $70 million was committed to private companies raising money under regulation crowdfunding. This represents a 746% year-over-year growth over the previous March. There are a few contributing factors related to this. First, last March was when our economy shut down due to the coronavirus, and issuers and investors stayed on the sidelines waiting to see how things would play out. During that month, the index was down 27.2% or 26.44 points over the prior March. If the pandemic hadn't shut things down, we probably would have seen a 25% growth over the previous period. Second, since the pandemic hit, stimulus programs went into effect, which stabilized the markets. Investors who were stuck at home were in front of their computers and willing to step up to help local startups and small businesses where other forms of capital were not available. And the availability of the vaccine brought more investor confidence to the capital markets. Finally, changes made by the SEC increased the maximum issuers can raise from $1 million to $5 million. That went into effect on March 15th. This led to larger issuers entering the space. As a matter of fact, if we look at the average revenues of issuers successful at raising funds online from retail and accredited investors under regulation crowdfunding, we see that the average revenues increased 960% from $457,000 to $4.4 million. Pre-SEC changes to post-March 15th changes, showing bigger firms are now interested in raising money online now that the caps have increased. While there have been 5 offerings that raised the $5 million max, there are over 660 active offerings each day. Hence, the average raise is much lower. Nonetheless, post the new rules, average raises have increased 24.7% from $314,000 to $391,500. This being said, March was also down 6.1% over February in terms of the number of offerings. There were 122 new offerings for March. The record was December 2020 with 138 offerings. And so there was a slight trailing in offerings for March despite the massive amount of capital that flowed in. We do expect the number of new offerings to increase in April. The number of investors in these private offerings also jumped to a record high in March. There were over 72,000 retail and accredited investors in private offerings in March alone. To put this into perspective, the entire first year of regulation crowdfunding only had 45,000 investors. So this represents a significant shift in investor interest. Average investments to date have been $783. We actually like the fact that this number isn't insanely high because it shows the logic in the system, and investors understand the risks many of these early stage investments entail, and hence they are deploying a rational amount of capital. It also proves the point that a lot of smaller dollar investments can add up to quite a bit of capital to help startups and small businesses not only survive the pandemic but also scale past it. Actually, with the changes made by the SEC, it's now possible for a startup to raise a Series A, a typical Series A round, which can be up to $5 million. This was proven by 3 issuers that actually did hit that $5 million mark since the new rules went into effect. There were an additional 5 companies that raised over $1 million, which was the old cap. So altogether, there have been 8 issuers during the month of March that raised more than $1 million since March 15th. I think that's an impressive data point. Average investments in March as well increased. They increased 24.5% to $975 per investor. This does indicate we believe that investors are willing to risk more capital, but still not at levels that would cause concern. And finally, the top industries for the month were specialty finance, software application, media, restaurants, and packaged food, showing the wide appetite investors have for investing in a broad range of industries, including startups and SMEs. I think what's particularly interesting, though, is the bottom 3 represent companies or industries that are typically difficult to fund by VCs. That's all for now. Make sure to subscribe to our channel so you can get the latest updates. My name is Sherwood Neese. We look forward to seeing you soon. Thanks. Bye.